about 30 seconds. We're just going to give everyone a chance to get into the room. So we've got about 200 people in the room. We're expecting about twice this. We're going to let people keep piling in. Super excited today. Drew's been on a few times. America's dental CPA. He's helped us out with a lot of information. And he said, Jonathan, this is breaking news. This is great stuff. We have the PPP loan forgiveness application available. So going through this forgiveness application, and Drew's going to correct me if I'm wrong, is super, super important, because if you don't properly categorize and ask for forgiveness, there could be some penalties and some, I don't want to say criminal, possibly criminal. Drew can address that when I throw it over to him. But yeah, it might not be good. So with that being said, it's a little bit after 10 a.m. and we've got a few hundred people here in the room. So I'm going to go ahead and throw it over to Drew, and we're going to go ahead and get started. Drew, without further ado, take it away. America's Dental CPA, take it away.
Thank you so much, Jonathan. Greatly appreciate it. Yeah, so the Treasury and the SBA released the PPP loan forgiveness application late Friday night. And so we took the weekend to digest it, to go through it all, make sure that we had at least a decent understanding as to what to expect and what was going on. It is a rather convoluted, lengthy application with a whole bunch of back and forth within it. You know, you start on page 9 and end up on page 10 and back to page 3 and all kinds of fun stuff. So what we've done is we've tried to map it out best as possible for everyone to understand what they're getting themselves into, and then to also be able to follow along to the extent possible. So my goal today is to go through the application with everybody, be able to answer questions relating to the section of the application that we are in at that point in time. So for instance, if you have a question about something I just talked about, please use the Q&A feature in order to ask your question. It'll prompt me. I'll take a quick peek and be able to address your question about this. There is an upvote feature and that Jonathan has turned on. So if there is a question, or if we end up with multiple questions and we want to get one to the top, then please use a thumbs up, which is the upvote feature there in the Q&A box. So without further ado, the PPP loan forgiveness application is available at treasury.gov, or if you're on our mailing list. We actually mailed it out yesterday morning, along with detailed guidance or detailed overview on some of the high points to take note of and to take into consideration. So if you downloaded that, like the email suggested that you should, and then you read through it already and read through all of our points, already, to at least familiarize yourself. Hopefully this webinar will be a little bit more impactful from an information perspective, and it won't be completely and totally news to you on every section. So what I like to do is I like to just take it from the top. And so you'll see I've got my screen really split into two here. I've got what we'll do is the forms on one side, and we'll kind of walk through the language of the instructions on the right-hand side, on the other side, while we're going through this. So when you download the actual entire application package, it's 11 pages from the Treasury. The very last page is an optional page, and so I just, anytime you don't have to do more work, why bother? So I would just throw that one out the window. So really, figure it's a 10-page application, including instructions. But as you can see, the actual form itself starts on page 3, and so the first couple of pages is discussion points and instructions. So instructions and more instructions, and then you get into the application itself. So ultimately, the moral of the story comes down to, in order to apply for forgiveness of your Paycheck Protection Program loan, you're going to have to complete this application as instructed within the instructions, as directed, and then submit that to the lender who you received your Paycheck Protection Program loan from. So if that's your normal bank, great. If that's a different alternative lender or a fintech, great. But ultimately, you're going to have to submit a variation of this, this or a variation of this. Some lenders are creating web portals and to be able to upload information and put this information in directly to. That's completely fine as well. But all the calculations and all the data that you're going to need is going to be the exact same. So if that case is the case, maybe you do a rough draft on paper, and then you transfer it into the lender's portal. whatever that may be, because you're going to have to do some certifications and sign off on it from a legal perspective afterwards, or as you're done. So moral of the story is, this is the entire application package that you're going to have to fill out, and then it has a lot of supporting documentation that you're going to have to submit with it, along with it, which was detailed or outlined in our email yesterday. I don't think we're going to get to the information that you're going to need to submit with it today, but if you want that, sign up for our mailing list, and you'll continue to receive our updates from there. So to get started with, business legal name, borrower, right? So if you just start reading through the application or the instructions itself, right? This application has the following components. One, the PPS loan forgiveness calculation form, a whole bunch of schedules behind it, supporting information, Schedule A worksheet, and then again, the optional form at the very back. I would not worry about that one. But if we're moving on down to business legal name, it's going to be the same legal name that you use on your borrower application form. So make sure that the form that looks similar to this, that your application, make sure you use the same name, DBA or trade name if it was applicable, your address, your EIN, your business phone, contact, and email address. Unless the contact or email address has changed, make sure to just use the same information that you used with your original application. Next line is the SBA PPP loan number. So if you don't know what that is, you may have to ask your lender. So what that is that's essentially the E-Tran or the application number from the SBA that secured your funds when they initially input your information into the E-Tran system. So you may have to receive this from your lender. You can just request it from them. But that's your SBA PPP loan number. Your lender PPP loan number, that's the loan number that's assigned by your lender specifically. So the number, the identifying number that they use in order to book the loan on their books. Then you've got the PPP loan amount. Well, that's the amount that was actually funded into your account and you signed the promissory note for. So say it was $100,000 was funded into your account on April 21st as an example. So your PPP loan amount would be $100,000. And the PPP loan disbursement date is the date it was funded into your account. So the example I just gave, April 21st, that it was funded, directly deposited into your account, that would be your disbursement date, right? And all of that information is outlined right here. It's actually on page 1 of the application package. You've got your SBA loan number, lender loan number, PPP loan amount, disbursement dates, etc. Moving on then, employees at the time of loan application and employees at the time of forgiveness application. So this is not a significant number in any way, shape, or form. Just look at your payroll reports. How many people did you apply? How many people were you paying? How many people were on your payroll at the point in time of your loan application? So it may be 0 from many of you whose office was shut down, who did not have employees on payroll. And then how many people were employed at the time of the forgiveness application. And so don't rush out to complete this application. Wait, until June 30th in order to really go through and complete this application. Because you're going to need information that is only available at June 30 or shortly after June 30 in order to complete this application. You're going to have plenty of time to be able to do it. It's not something that you want to rush out and try and fill out and submit right now. You want to wait until your 56-day period is over. You want to wait until after June 30th. That way you have all the requisite information to be able to accurately complete this. And we fully expect further guidance to be issued on a lot of these items, just small little detail things that could make a difference. And so again, I would not rush out by any means. In fact, I would say wait until the beginning of July in order to complete this application. Just our recommendation. And the reason why they're asking this information, employees at the time of forgiveness application, for instance, is they won't, I believe what the SBA and the Treasury is looking to see is, okay, how many people were on payroll at this point in time? If it's 0, and now how many people at the point in time of forgiveness? If it's 10, then they can say, you know what, 10 jobs were saved, and it's a talking point. Is my thoughts or my guess as to why that's on there. Next, moving on, is the idle advance amount and the idle application number. And so if you completed the contact form in order to open a case with the SBA initially under the Economic Injury Disaster Loan Portal or the Economic Injury Disaster Loan Program, then you would have received an application number that would have shown on your screen. That application number is your identifying case number essentially with the SBA that opened your case for specifically for the idle loan purposes. Now, the idle advance amount, that would have been just a miscellaneous random deposit that you would have received without any further communication from the SBA in your bank account that had to do with $1,000 per employee at that point in time. And that would be the Economic Injury Disaster Loan advance amount that would go on this line item here. If you don't know your idle application number, you didn't write it down when you were going through and you completed the contact form, then unfortunately you're probably gonna have to call the SBA, email them, whatever it may be, ask them what your application number is at that point in order to accurately complete this. So I'll take a quick look at some of the questions and seeing if anything relates to the areas that we're talking about.
And Drew, I can monitor some of those with you if you want, and I don't interrupt you, but I can chime in if there's something pertinent to what you're talking about that comes through.
Yeah, no, I'm just looking. It doesn't look like anything in here yet has anything to do with. Here's one that has to do with. If we filled out the idle application but never got anything, should we still put this down? So if you never received the advance, you would put 0 under the idle advance amount. If you never received the advance, you didn't get a deposit from the SBA, you would put 0 for the idle advance amount there. If you received 9,000, you would put 9,000. If you received 10,000, you put 10,000. 1,000, you put 1,000. But otherwise, you'd put 0 there. So, and then another question here comes down to the $2 million. What exactly does that mean? I don't see where that one went to. Oh, there it is. And so, okay, so we'll get to that one here in just a minute here. So moving on, payroll schedule. So this is pretty self-explanatory. You know, what is your payroll schedule for your practice? Is it weekly, bi-weekly, twice a month, 15th and the 20th, 1st and the 15th, et cetera, et cetera? You just check the box, right? Check the box as to whatever your payroll schedule is. I know most of our clients are on a bi-weekly payroll schedule. And so therefore they would check the box for bi-weekly, meaning that they pay their employees every 2 weeks. And then covered period. So your covered period is going to be the 56-day period starting with the date that your funds were deposited into your account. So if your PPP funds, in the example we gave above or before, was deposited into your account on April 21st, that means the start of your covered period is April 21st. 56 days later, which I believe is June 20th, is going to be the end of your covered period. So April 21st through June 20th would be your covered period at that point in time. So that's what you would put in your covered period. Now, if you're on a bi-weekly payroll, for instance, and you want to consider the alternative payroll covered period for your payroll costs, if it would make sense from a strategic perspective, if you would get more dollars into your loan, out of your loan forgiveness by using the alternative payroll covered period instead of just the normal, straight, ordinary covered period, then that's certainly something that can be done. Now, you might ask and say, well, what in the world is the alternative covered period? And that's a fantastic question. If you look here in the instructions, borrowers with a bi-weekly or more frequent payroll schedule may elect to calculate eligible payroll costs using the 56-day period that begins on the first day of their first pay period following their PPP loan disbursement date. So you might say, okay, what in the world does that mean? Well, what that means is that if your PPP loan funded on April 21st and your next 2-week payroll period starts or begins on April 26th, then you can, for the purposes of payroll costs, you can elect or choose to use the alternative covered period that would not start on April 20th or 21st, excuse me, would not start on April 21st. It would start on April 26th and it would end it would end 56 days later. And so in that case, it would start on April 26th, and then it would end on June 26th, June 25th for that purpose, June 26th for that purpose. And so in that case, you were going to have a different covered period compared to your alternative covered period, and they're going to be used for different purposes. And so under some expenses, some costs are only eligible to use the covered period. Payroll costs specifically could use the alternative covered period if it makes sense for you as the business owner, as the lender, as the lendee who has received the PPP funds. Now, that's at your sole discretion. It's not at anybody, it's not at the bank's discretion, it's not the government's discretion, it's at your sole discretion to decide, does the alternative payroll covered period or the normal cover period make more sense, be more valuable to me for my forgiveness, which one makes more sense, and then make that choice. So and that's a very confusing concept. So definitely do some more research reading, dig into that a little bit more. There's some strategy that is involved there with making sure that you're choosing the proper payroll period or the proper cover period in order to maximize your payroll loan forgiveness. Next question came back. There was a question that had to do with this in excess $2 million excess. So if a borrower, together with affiliates, if applicable, meaning that if there's a group of companies that is all has common ownership, those are affiliated companies, receive PPP loans in excess of $2 million, check here, right? So that's a check the box certification and acknowledgement that if this particular company had common ownership with 3, 4, 5, 10, 12, 20 other companies, whatever the number is, common ownership, so they're considered affiliates, and they in total had received PPP loans in excess of $2 million, you have to check that box. Now, we don't expect any of our clients to have to check that box, and we would expect that for most dental practices out there. For instance, if you belong to a DSO organization or you own part of a practice that's also owned partly by a DSO organization, then you may have to check this box for your particular location, or if they're completing this, they would have to check this box for your particular corporation. But by and large, almost hands down, we don't expect any of our clients to be, to have to check this box. And that's going to essentially what that's saying is, yep, we've had more than $2 million of PPP loans, which is going to then have more scrutiny by the SBA and the Treasury Department at that point in time. So hopefully that answered your question. Okay, here's a question relating to the PPP loan disbursement date. If it was deposited after business hours to use the next day, I think that probably would be a safe bet. So say that you got it at midnight, and it would be on the next business day as opposed to on the calendar day, et cetera. I think that is probably splitting hairs a little bit, and it would not matter so much. And I think it's probably also going to be a bank by bank basis. That's something that the bank itself, your lender, who you received your PPP loan from, if they deposited the money after hours, say Friday at 8:30 p.m. at night, as an example, is that going to go on Friday's business, or is that going to go on Monday's business? And that's probably going to be your bank itself is probably going to say, this is how we want that treated.
Drew, really quick, if I can interrupt that one that keeps getting voted up to the top there. This came up yesterday, and I just want to ask you really quick. So the interpretation for some was that the PPP loan was basically a federal form of unemployment benefit. Now, my interpretation, Drew, is that's not the case. It is an impetus to restart the economy. So what they're using that money for is to get your employees back in there, get them working. As you start to turn the engine back onto your business, we're getting the full force back, and we're getting money in their pockets. They can go out and spend that money and kickstart the economy. So it is in no way, shape, or form meant to be a form of unemployment, correct?
Yeah, correct. And so it is meant to keep employees on payroll, but as we've been saying from the get-go, it's meant to keep employees on payroll when a business cannot afford to pay them, their normal salaries based on diminished revenue. And so since these offices are just getting kickstarted back again, to use your language, then in that case, we're going to see the revenues ramping up. It's going to get back to a more normal playing field, and offices will be able to pay their employees, their normal wages without any issue. if you're starting and you're working at 60, 50, 60% capacity, the overhead would be too high to have your employees there 100% of the time, paying them 100%, while you don't have the revenue to cover that. So, but at that point in time, they're going to be making too much money to be on unemployment. So it's one or the other. Are they on unemployment because they're not working, or do you have them back and you're paying them 100% for a 56-day, essentially 8-week or 2-month period, in order to supplement their income and help you get back into the swing of things? Which is why from the very beginning, our recommendation was to wait to apply for closer to when you're back into your offices opening back up. Even as of today, the PPP loan funds in round 2 still have about a little over a third, or like $100 billion available to be able to put in an application and draw out of. So we don't, honestly, if it runs out, if tranche 2, the second round runs out, I'll be surprised at this point in time. But so we'll see. Here's a loan disbursement date question. Has anyone come across different dates for actual money funded into your accounts and the funding date mentioned online or statements? For these are 2 weeks apart. Funding date being shown as the day I submitted the application. Which date do I use? That's interesting. So it would be the date that the money actually hits your account would be the funding date. And I'm not sure where this question says the funding date mentioned online is 2 weeks probably before you actually receive the money in your account. And so I would, if it were me and I were completing this application for you, I would use the date that the money actually was funded into your account, not the date that the promissory note is dated. So I'm going to look down here at the bottom and see if anything's come up. Bank said the date it actually came through even when it was in the evening. So one of the questions was if funds were deposited late in the evening after hours, does that mean it's going to be the date in which that you received the money or the next business day? And I said, if it were me, I would guess the next business day. Looks like one bank specifically has said that it's going to be the date of the funds, no matter what point in time in the day it was received, which I can get on board with as well. Like I said, it's probably going to be a bank by bank decision, and you'd have to talk with your bankers in order to really make sure that that makes sense. So, okay, so here's another question. Using the alternative payroll covered period is great, but the actual pay to the employees goes to the following Friday after the 2-week pay period. This will extend the final payroll beyond the alternative covered period. And so that's actually very specifically in here in the instructions, is that borrowers who elect to use the alternative payroll must apply the oops, not that one. It specifically says in here in the instructions that if the payroll extends beyond it, as long as it's paid before the next regular cycle, for the next regular cycle. And so as long as even if it extends after, so your pay, say you're incurred, that's an incurred item. So if your dollars for payroll are incurred by the end of your covered period, even if they're paid after the covered period, they're still to be counted. So that's a fantastic question. That's where it can get a little tricky with the dates specifically, both with the normal covered period or with the alternative covered period, is that you can have expenses that are incurred and not actually paid yet, that would still classify or still be able to be counted as the specifically for the forgiveness aspect. So, okay, here. Do I have any reservations about using alternative covered payroll period? No, we don't have any reservations or concerns about using the alternative payroll covered period. What we're going to do with the clients that we're completing these applications for is we're going to evaluate both scenarios and plan ahead of time to determine which scenario, either using the covered period or the alternative covered period, is ultimately going to provide more value. Being that the offices were largely closed still, or just getting started when most of our clients received their PPP funding, we're anticipating that the alternative covered period is going to be a better value or a more strategic option in almost every case. And so we don't have any reservations about using the alternative covered period at all. In fact, we expect that that is more likely to happen, than the typical covered period, or the ordinary covered period. Okay, I think that's okay, so monthly, here's a great question. Monthly payroll does not qualify for the alternative payroll covered period. That is correct. Borrowers with a biweekly, so right from the instructions here, borrowers with a biweekly or more frequent payroll period. So every 2 weeks or more frequently. If you're on a monthly payroll period, the only option is to have is to use the normal covered period in your case. So. Okay, so I think that is everything to date that for this area so far. Okay, so looking on to continuing. So let's get down into the rest of the first page of the actual application itself. So we're going to get into the forgiveness amount calculation at this point in time. So there's several lines here, some of which are blatantly obvious as to what should go there, and some are a little convoluted and require further instruction from different areas in the application package. So we'll start with payroll and non-payroll costs, right? So this is the very kind of the bare bones, the basics as we get into this. Now, payroll costs are going to be payroll, health insurance, retirement contributions, and state taxes as it relates to dollars either paid or incurred during the 56-day period. Now, there's some tripwires there and some things to consider. And so there's actually a Schedule A, as you can see here, that is dedicated to calculating payroll costs. And so we're going to skip over that one for now, and we'll come back to that here in just a minute. Line 2, business mortgage interest payments. And so if you have a loan for either real or personal property outstanding on your practice or your business that you received a PPP funding for, you can receive or count or include that mortgage interest on your application, the mortgage interest incurred and or paid and or incurred during the 56-day period. In order to qualify for that, you're going to have to include the bank's amortization schedule, as well as copies of the payments or the statements from your bank showing that you paid the payments and what the interest allocations were, and that should tie to line 2 right there of this not relating to non-payroll costs. Line 3, business rent or lease payments. That's going to be your lease payments or rent payments that were paid within that 56-day period. It doesn't specify a whole lot other than for again, it can be for real or personal property leases, and so maybe you lease your cone beam, maybe you lease a Serac or a CAD/CAM system or a printer, copier, for instance. Maybe you have a rental agreement with a storage locker. Your normal space lease that your office operates in, that's a no-brainer. That one definitely is going to be included. The key here is that there has to be an enforceable lease agreement that was in place prior to February 15th, 2020. So you have to have a signed lease or lease agreement that's dated prior to February 15th, 2020 in order for this to be enforceable and in order to be included. Because with your application, one of the supporting documents that you're going to have to include for this line 3, is going to have to be a copy of your lease, as well as your canceled checks for the lease payments that were made, or the lessor's statement showing that you had a lease payment due in February of 2020, and your lease payments, your statements from your lessor showing that you had lease payments in each month that covers your 56-day period plus 1 extra month. And so that might be April, May, June, July, or May, June, July, for instance. It may, depending on where your covered period falls, you may have to have more than not, but you can only take into account the amounts paid or incurred during your 56-day covered period, not the alternative covered period, the covered period. And that comes down into the line 3 of the instructions. Enter the amount of business rent or lease payments for real or personal property during the covered period. You have to pay attention. That's where it gets a little tricky, specifically the covered period. Business utility payments.
Sorry, Drew. just to clarify, the question comes up, and I think you covered it, but if there was deferred rent payment, that is unequivocally not a covered period payment. That's correct? So if we didn't pay our rent in February or March.
Yeah, and that's a fantastic question. That's one of those things where we probably put off, and we're not expecting that to end up being forgivable. At this point in time, there's nothing that blatantly stands out that says that it's not. But at the same time, it's see right here. If we go down to non-eligible non-payroll costs, specifically covered rent obligations, business rents or lease payments pursuant to lease agreements for real or personal property enforced before February 15th. And then it goes down here further to say an eligible payroll cost must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date. So meaning that, on the surface, it sounds like you might be able to pay it within the covered period for a deferred lease payment. But we expect that to be an item that the SBA or the Treasury is going to have further guidance on, clarification on, release in a future Q&A session or release in a future question and answer document that they're going to clamp down on. Because what you do have to do for the mortgage rent, the business lease and rent and lease payments is you have to submit the copy of the lease itself, as well as your canceled checks. And so we fully expect the banks to have some scrutiny there and look and say, okay, is this the amount that's on the lease? Does it make sense? Does it tie out? And if you have twice the amount of lease payments in that period, it may draw questions, and your bank may ask further questions. So if the SBA doesn't provide any further guidance, or the Treasury, either one doesn't provide any further guidance as to whether a deferred rent payment or a future rent payment can be included during that 56-week period, then we fully expect that to be a bank-by-bank decision. And I believe we're going to see examples in both sides from different banks. So, fantastic question. Thanks so much, Jonathan, for bringing that up. Line 4, business utility payments. So, business utility payments is exactly what you would think it is. It's going to be right here. You're going to enter the amount of the utility payments during the covered period for which service began before February 15, 2020. But we look and we say, well, what is a utility payment? What is covered as a utility payment? Well, what specifically is outlined to be covered as a utility payment? Electricity, gas, water, transportation, telephone, and internet access is what is specifically outlined to be included or eligible as a utility, as a covered utility. So that takes us down from lines 1, 2, 3, and 4. Let me check the Q&A real quick and see if we have anything about those. What if you have a home office and normally deduct part of your mortgage because of that? So if there's no lease in force previous to February 15, 2020, we would not expect that to be a covered cost. You're gonna have to show a lease that's in force. That one's gonna be tricky, so I would not expect that one to be home office to be included. If you have a loose family agreement for rent, family-owned building has been going on for years, can or should you create an official document dated before February to make it correct for forgiveness? In that case, you're going to be able to get around, if you don't have a official lease document, you're going to be able to get around that by receiving a statement from your landlord that shows you had a balance due or a rent payment due for February 2020. And that you paid that rent payment for February 2020. And then you're also going to show that you have rent payment due for, whatever your covered period is, plus one more month. So April, May, June, or April, May, June, July, maybe even, depending on where your covered period ranges, or just May, June, July, perhaps, in order to get around that, not having an officially signed lease document. So there is some paperwork and some specific items that you'll have to provide. Okay. And then here's one back to the alternative payroll covered period. I received my PPP loan on 5/4, so May 4th, which is the funding date, which is the starting of your covered period. My payroll frequency is twice a month. If I use an alternative covered period, it will start on 5/16. So here's the deal. You can't use an alternative payroll period because your payroll frequency is not bi-weekly or more frequently. So twice a month is less frequent than bi-weekly. So if you're twice a month, if you're monthly, if you're quarterly, doesn't matter. Whatever your payroll frequency is, bi-weekly or earlier or earlier has the ability to use the alternative payroll period. You cannot use it if you're a twice a month payer. Just FYI.
And Drew, I apologize. One that comes up quite a bit, and you might have covered it, I apologize, is giving substantial bonuses to employees to utilize that PPP money, and what percentage do you think would look suspect? And then if we don't have a staff member coming back and we want to employ a family member and paying them with that PPP money, what are your thoughts on those two items?
Yeah, so we'll get into the payroll here in just a little bit down when we get into Schedule A, but ultimately there's nothing that's in here that we've seen that has to do with caps on any kind of bonuses. There is a total earnings or total cash compensation maximum per individual employee that we'll get into and we'll see here in just a minute. And if you've got somebody who's not coming back to the office, there's a couple of different ways to get around that. One is the safe harbor. When it comes to the FTE calculation that we'll get into here in just a minute. And two is if you're going to hire a different employee, you can absolutely hire a different employee. No ifs, ands, or buts about that. Here's one line, comes to line 2, interest on loan for equipment. Is that forgivable? Yes, loans on real or personal property, as long as it's business related. Equipment loan would be considered a personal property loan. That's absolutely one that would be included. Can we change our payroll from 2 times monthly to bi-weekly when we reopen? You could change your payroll period if you wanted to change your payroll period. There's no indication that it makes sense to change your payroll period. So take into account all the facts and circumstances and see. There's nothing that says you can't change your payroll period, but there's no real need to based on the rules and regulations. So. Another question about you can use the alternative payroll period with a semi-monthly and monthly payroll. No, you can only use the alternative payroll period if you are on a bi-weekly or more frequently, not semi-monthly, not monthly. And then let's see, we'll get into more payroll stuff. Okay, so moving on here then. So moving on to payroll costs. So we go back to line 1, right? So to complete this initial section, payroll and non-payroll costs, we have to complete line 1 payroll costs. And in order to complete line 1 payroll costs, we're gonna have to go to PPP Schedule A, line 10, because that's where that comes from, right? And so if we move on to PPP Schedule A, line 10, we have to complete everything else above that on PPP Schedule A in order to get to line 10 for it to flow back to page 3, line 1. So it's kind of, that's where it comes down to. There's a lot of back and forth, a lot of information that's kind of in multiple different places. But moving forward here, we've got a line 1 through 5 on the instructions for Schedule A is all going to be completed based on Schedule A worksheet tables as directed. And so lines 1 through 5 here under your PPP Schedule A are all going to come, the answers to all of these questions are going to come from a table that you're going to have to fill out, which is, again, a few pages back in the application here. So we'll move on to that, and more instructions to complete this table. So this table, PPP Schedule A worksheet, is broken out into 2 separate tables that are important to note. Table 1 are essentially for employees that make less than $100,000 a year. Table 2 is for employees that make more than $100,000 per year. And so these are actual employees, not, so if you're a Schedule C filer, a self-employed person, or if you're an individual partner in a partnership, you would not complete you would not add yourself onto table 1 or table 2. There's a whole separate place for you, but these are actual employees. Now, if your practice is an S corporation, you should be an employee of your S corporation, and so you would list yourself as an employee of your S corporation on whichever table is relevant to you. So if you were paid in 2019, so look here, received compensation from the borrower at an annualized rate of less than or equal to $100,000 in all periods in 2019, or were not employed by the borrower at any point in 19. They would go under this table, table 1. Table 2, if they were paid more than $100,000 in 2019, they would go on table 2. That's what the purpose of table 2 is, okay? And so you're going to need to include every team member on one of these tables. So every person that you pay in that 56-day period is going to need to be on one of these two tables, either on table 1 or on table 2. Let me check the Q&A real quick just to see if there's any questions about that. Here's a question. If we are an S corporation, do we show the payment to owner employees as separate? No. So as an S corporation, every employee, including yourself, as an employee of your S corporation, is going to be on one of these two tables. And so every employee's payments are going to be shown separately on this schedule. So for instance, if you've got two doctors, owner doctor and associate doctor, that are both made more than $100,000 in 2019, both of those people, both of those individuals are going to be listed under table 2. If you've got two owner doctors, both of which made or were paid more than $100,000 in 2019, both of those names, both of those individuals are going to be listed under table 2. Then, okay. And then, no. All right, so it looks like no other questions about the tables there. So, okay, so no other questions regarding who goes on what table here. So let's start with just looking at table 1. I mean, they both have the same bones: employee name, employee identifier, cash compensation, average FTE. So let's start with those. What do those columns mean? Well, employee name is pretty obvious. You're going to separate, the important part here is you're going to separately list each employee. So each employee is on a different line item here. And if you need more room, attach an additional sheet, or maybe just use an additional sheet. Create an Excel file that looks like this, that does all your calculations for you. I have to imagine, actually, I believe we're in the process of working on one. So we're going to have one that's going to be available to be able to fill out eventually here, probably within the next week or so. I imagine we'll get it through testing. So, but separately list each employee. Do not include independent contractors. It says owner employees. However, the language is not clear between the two, and so there's conflicting language in the application. And so we're saying at this point in time, we plan to include owner employees here because of the conflicting language. That being said, we may end up receiving further guidance that says not to, because right now there's conflicting language, which is why we're saying don't rush out and fill this out right now. One, you don't have all the information to complete it. Your 56-day period is not over. 2, you're going to need to know information at 6:30 in order to make sure that you accurately fill this out to the most advantageous way for you. So employee name is going to be here. That's pretty obvious. Employee identifier is going to be the last 4 digits of their Social Security. So every employee has their own line. Their last 4 of their Social Security number is going to be the employee identifier. That's going to be on every single line as well. Cash compensation, the sum of the gross salary, wages, tips, commissions, paid leave. So that's the key. PTO, right? Vacation, sick pay, whatever it is that you pay out, bonuses, etc. Within that 56-day period, that's going to go into your cash compensation line item specifically for each individual person. Now, there is a caveat here. And we talked earlier about, can you bonus employees out? Say that you get close to the end of your 56-day period and you need more dollars in your payroll bucket in order to meet the 75% mark that you're trying to hit. Then you could bonus employees out, for instance. However, you cannot have more. If you read here in the very last sentence under the cash compensation instructions, you cannot have more than $385 in table 1 or 2 for an individual employee. That means this line item, cash compensation, for any individual person cannot be higher than $15,385. Their normal gross wages, any PTO paid out, any bonuses given, etc., capped at $15,385, which is equivalent to the $100,000 compensation over an 8-week period. So that's how you fill out this column, cash compensation, for each of the tables. Let's look here real quick under questions. See if
I think through the process with the upvote, and there's 110 questions in there now,
yeah,
so I think they're just hammering them in. I don't know if
okay.
trying to sort or answer them.
No, I did. I've been looking at top and bottom, so I'm bouncing back and forth. So we bonus our employees during the period account as part of the 75% payroll requirement. Yes, we just answered that one. So yes, bonus, PTO, vacation time, et cetera, et cetera, et cetera. We've already answered that one. Expectation that they will extend the coverage period. I don't imagine that they will extend it, but I don't have a crystal ball at this point in time. So maybe they will, maybe they won't. They have in a way, they have extended it in that if you're on a bi-weekly or more frequent payroll period, you can choose an alternative payroll period. And okay, so it looks like that. Some retirement stuff, which we'll get into here in a little bit. Question, clarifying question. So the $15,385 is the total they can receive from salary and bonuses. Yes, and PTO payout, severance package, the whole nine. That's the total that they can have per individual person on that line item. And then gross pay, would gross pay include federal taxes? It would include their portion, the employee's portion of federal tax withholdings and federal employment tax, the employee's portion of the federal taxes. Yes, it would include that. It would not include the employer's portion, but it would include the employee's portion. Okay. If I am an S corporation and just pay myself as the only employee, and will be paying myself regular salary than I normally do with payroll, which is more than 100,000, I can still get some of the loan forgiven, correct? Yes, you certainly can. You would be able to get up to $15,385 in gross wages, right? Your cash compensation, which would go under this box, table 2, as an employee making more than $100,000 in 2019. Your $15,385 would go under the cash compensation in box 2, which would then flow through to the rest of the application later on. Okay. If I did not include myself in the application, can I still apply for the PPP loan again? If you've taken a PPP loan already for your business, you are not allowed to apply and take another one. So unfortunately, it sounds like if you did not fill it out properly to begin with, unfortunately, you're out of luck, which is unfortunate. Sorry to hear that. Okay, when you set over $100,000, accounts in the amount of W-2 or the amounts including profit, only your payroll. So keep in mind, this isn't related to payroll. Table 2 is related to your W-2 wages payroll for 2019. Either on payroll wages, they were paid less than $100,000 in 2019, or they were paid more than $100,000 in 2019. Okay, and then moving on here. Okay, perfect. So we're going to continue on here. So the next column that we're going to need to fill out in order to work toward completing our table is the average FTE. So, there's a couple of questions in there. What is an FTE? Well, an FTE is a full-time equivalent employee. And so in a dental practice, you're going to have people that are working part-time, a couple of days a week. You're going to have people that are working full-time, 4 days a week, right? Well, the actual definition in the guidance, the initial guidance that was provided by the Treasury, actually has specific ways of calculating what is a full-time equivalent employee or an FTE. So here's what it says. For each employee, enter the average number of hours paid per week, then divide by 40. Then round up to the nearest 10th. So let's just do math for a quick second. If you've got somebody who in your office works 1 day a week, so just or we'll say 10 hours a week, right? So they work 10 hours a week, divide that by 40, that's 0.25. You're going to round that up to the next nearest tenth, which is 0.3. So essentially, then in that case, you've got Sally, who works up front part-time, office assistant, whose last four digits are 1234. Cash compensation was $4,500, and they're an average FTE of 0.3. That would go under your average FTE column. If you've got a hygienist who works 36 hours a week, for instance, 36 hours, right? So you've got Susie hygienist, 1234, employer identification number, the last four, cash compensation is $15,385 because they are a rock star hygienist, for instance, and their average FTE, right, is going to be 0.9. It's going to be 36 divided by 40 equals 0.9, and that's so there's a cut. So that's one way of calculating an FTE. Alternatively, a simplified method that assigns 1.0. 1.0 is the FTE. Remember we said I think with Sally upfront assistant was 0.3, and Susie hygienist was 0.9 FTEs. The simplified method that the Treasury says is fine, the SBA and the Treasury says is okay to use, would be assigning 1.0 for employees who work 40 hours or more, and 0.5 for employees who work fewer hours. And so what we're fully expecting to see is that most of our offices, it's probably going to make sense to use the simplified method, but we're going to ourselves, when we do these calculations in our workbook that we're creating to do these calculations for the clients that we're doing them for, we're going to run side-by-side scenarios and see, okay, which one do we have a better result in? Does it make sense one way or another to choose the simplified versus the more complex version? And then we're going to go from there. So that being said, take into consideration, there's two options here to calculate your FTEs. Use whichever option is more advantageous to you because it specifically says may be used at the election of the borrower, not the bank, not SBA, not the Treasury. Either one could be used at the election of the borrower. And so that's how you calculate the average number of FTEs here in your table 1 and your table 2. Last but not least, salary hourly wage reduction. Okay, so salary hourly wage reduction actually goes down to quite a bit more. It's actually, there's a pretty simple way to go through this. So each employee, right? So we had employee 1, employee 2, down to employee 6. For every team member who earned less than $100,000, you're going to have to do this calculation for and just make sure and see if you're going to have to reduce or add a reduction factor into your application. One, essentially right here, salary wage reduction, this section right here, step 1, which we fully expect most dental offices would be able to do step 1 and not have to go down to step 2 and step 3. So just so you know, but step 1, dental practice, determine if pay was reduced by more than 25%. Well, into the average annual salary or hourly wage. So specifically, person 1 made $20 an hour pre-COVID. When they come back, what do they make now? What they made pre-COVID, that would go under box A, so $20 an hour. Into the average annual salary or hourly wage between January 1st and March 31st. If they made $20 an hour between January 1st and March 31st, until we have further guidance and clarification that we need to do something different, that's the stance we're going to take, is that if they made $20 an hour before and they're making $20 an hour, made $20 an hour now during the covered period, and they made $20 an hour before on average between these and during this 3 months, then you divide one by the other, and as long as it's greater than 0.75, meaning that you've not reduced their compensation by more than 25%, that means that you're going to enter a 0 in this column for salary hourly wage reduction, which is what you want. You don't want a reduction. You want a 0 in that column. So the safe bet at this point in time, until we receive further guidance on this particular matter, further clarification on this particular matter, is going to be if you're paying them the same now per hour that during your covered period that you paid them per hour previous to COVID being shut down for COVID, during the January 1st through March 31st timeframe, if you're paying them the same or maybe even more, say they got a raise in February, maybe even more, then you're going to be safe there as long as you don't reduce their hourly wage by more than 0.25. We feel like that's going to be a safe bet there. So let me move on. Let me look through these. Okay, nothing that's been upvoted. And then, is it better to have, here's back to the FTE clarification. I'm sorry, I didn't ask clarification. So there, here's a question actually about employees. If you have temp hygienists, cut checks through the temporary agency. So those are going to be contract labor. They're not even going to be taken into consideration on this schedule. And so, it shouldn't have been taken into consideration. The wages paid to a temporary contract labor agency for temporary hygiene help should not even been taken into consideration on your payroll, your PPP application. And so you're not going to take them into consideration here if you have temporary hygienists. They're not going to be on table 1 or table 2. You're cutting the check specifically to a hygiene agency as contract labor. So next question is, if I'm open 36 hours a week, how do you calculate the FTE? So say that your front desk or any individual employee works 36 hours a week. Based on this, if you go back to this instruction specifically from the Treasury, enter the average number of hours paid per week. So if that's 36, then you divide it by 40. So that would your FTE would be 0.9 in one scenario. In the other scenario, it would be 0.5 because they work less than 40. Specifically, Bright Line says a simplified method that assigns 1.0 for employees who work 40 hours or more, but they're not working 40 hours or more, are they? They're working 36 hours. And so if they work 36 hours, they're a 0.5. And 0.5 for employees who work fewer hours, fewer than 40. So that's how you calculate FTEs between the two different scenarios. If they're working 36 hours on average, based on the payroll reports, they're going to be a 0.9, 36 divided by 40, 0.9, if they're, or rounded to the next 10. And if you're going to go with the simplified method, that would be a 0.5. And the reason why maybe you want to go with the simplified method, or maybe the reason why you'd want to go with the more complex method, is it comes down to the forgiveness application itself and the whether or not you've maintained the number of FTEs at June 30th is also what we feel like most dental offices are going to rely on. Safe harbor to maintain the number of FTEs at June 30th, specifically people working at June 30th, and whichever calculation gets you to your right answer or better at June 30th is what we're going to go with there. So that's how you calculate the FTEs based on 360, and that's how enter whatever number, 36, 32, 28 divided by 40, round up to the next 10, next 10th. Or the simplified method is if they're working less than 40 hours, then they're a 0.5. If they're working more than 40 hours, they're a 0.1. Then in my application, it asks for the number of employees, but my FTE count is much lower. So that goes back to the same exact under the very top where it asks the number of employees at the time of the application, asks for the number of employees at the time of the loan forgiveness. It's just a matter of what is they want to see, like how many jobs were saved is my guess there. Let's see here. Can we give temporary raises or hazard pay to employees in order to meet the requirements under this cash contributions? Yes, you can give temporary raises, you can give hazard pay. You cannot go above and beyond $15,385 per employee. That's going to be the key there. And then I've answered that one. So here's a fantastic question. Thank you so much for asking this. Why are you calculating the average FTEs on 6/30 if the loan's in before this? So we're gonna get to that here in just a minute, but there is a safe harbor rule that as of 6:30, if you hired your employees back and have the same FTEs, then at 6:30, if you meet that requirement at 6:30, then it's not going to count against you for forgiveness. So that's a fantastic question. Stay tuned. We're going to get to that here in just a minute. Okay. Okay, so it looks like we've caught everything as it relates to FTEs and reduction. Okay, perfect. So moving on. So now we've got this box filled out, right? So we've got table 1 filled out. We've got table 2 filled out. We know what each line is. We know what each column is. We've got the tables, our data filled out. So taking that information from these tables, we're going to go back to this worksheet here, and that's where we're going to enter the totals. So here's the total of table 1, box 1. The average FTEs, box 2. So it's not going to be a total, but it's going to be an average. So you're going to average these FTEs together for these FTEs together for box 2. That's going to go here under box 2. Maybe scroll down here to this one. So average of FTEs, average number here is going to go here in box 2. Enter salary hourly wage reduction, box 3. So if these are all zeros, hopefully here in box 3, because you're paying everybody the exact same hourly wage as you were before, is what we're hoping that is what that's going to mean. Again, that could change. As of right now, there's no further guidance, but in the initial guidance, leaves it rather open. And so we're going to, our expectation right now today is that if you're paying somebody $20 an hour between January 1st and March 31st, and you're paying them $20 an hour during the covered period, that's going to be a 0, and it's not going to count against you negatively. Subject to change with additional guidance that could be issued. So that's going to be a sum of these items right here. It's the dollar amounts that are being reduced from here. Hopefully it's 0. And then so now we've got lines 1, 2, 3 completed. Lines 4, enter cash compensation box 4, right? So that's going to be table 2. So the sum of box 4, this column right here. Enter the average FTE box 5 from here. So that's going to be the sum of that here under box 5. And then moving on to the fun stuff. Okay, non-cash comp. So now we've got lines 1 through 5 completely filled out on this Schedule A. Moving on to line 6. Total amount paid by borrower for employer contributions for employee health insurance. So that's going to be here under line 6 instructions. Enter the total amount paid by the borrower for employer contributions for employee health insurance, including employer contributions to a self-insured or employee-sponsored group health plan, but excluding pre-tax or after-tax contributions by employees. So that means you pay $1,000 for your bill, your health insurance bill, but the employees through payroll contribute 500 of that. Line 6 would not be 1,000, it'd be 500. It would be the net amount, net of the employee contributions. You would not include the employee contributions, only the amount of the employer contributions specifically to an employee health insurance plan, a group employer-sponsored group health plan. So if you're yourself or the only one on the plan, it's not a group plan, it's an individual plan. If there's 2 of you and you're on a group plan, that's a group plan, 2 or more. So that's the amount that would go on line 6, the employer's portion specifically for the group health plan that's paid. Line 7, total amount paid by borrower for employer contributions to employee retirement plans. So here, if we go on to line 7 instructions, the total amount paid by the borrower for the employer contributions to employee retirement plans. Again, excluding any pre-tax or after-tax contributions by the employees. So not the employee's elective deferral, but the total amount. So any amounts paid by the borrower, you, for employer contributions to employee retirement plans. So if you're an S corporation owner and also an employee, and you have a 401k with a profit sharing contribution, and a cash balance plan stacked on top of that, like so many of our clients have, the employer's portion that you're paying specifically for the employees, including yourself as an employee of the S corporation, the 3% safe harbor non-elective, the profit sharing, the cash balance portion, all of that can be included here on line 7. All of that can be included here on line 7. Now, there's no guidance at this point in time yet that specifically states whether if you have a past balance, if you can catch that up and pay it, or make a future contribution to it. There's no specific guidance that says whether you can or can't. But what it does say is that the payroll costs paid or incurred and then paid before the next payroll period could be included. So our interpretation as of today, without any further guidance or until further guidance tells us otherwise, is that if you have a retirement plan contribution for 2019, for instance, that could be eligible to be considered for forgiveness as long as it's paid within your covered period or your alternative covered period, depending on which you elect to use. We would hold that. Don't rush out and make your 2019 contributions right now. You have 56 days from the point in time that you received your funding, right, in order to do that. Wait until the very end, and let's see what kind of further guidance comes out. Just like bonuses, just like pay raises, just like anything else, let's wait till the end, close to the end, see what kind of additional guidance comes out, because that's going to make or break any kind of strategy. If you go and you spend a bunch, you spend the money on the retirement right now, and it turns out that additional guidance comes out and says, no, you can't do that, you've spent the money on that at that point in time, which you may want to anyway, but it would certainly be nice to know and wait and see, okay, am I going to get this forgiven or not, and be able to make a decision based on the actual information available at that point in time, which for many of you could be at day 50 or day 52, which is what it would make the most sense to make that decision. So that's line 7. Line 8 is going to be the total amount paid by borrower for employee state and local tax assessed on employee compensation. That's going to be the California training. That's going to be the state unemployment specifically. And so that it's going to be a very small amount during that 56-day period. That's going to go on line 8. So it's going to be amounts paid by you, the borrower, specifically on state and local taxes assessed on your employees. Not the employee contribution, only your contribution on their behalf. Let's take a quick look at Q&A and see if anything on lines 6, 7, and 8 has come up. Contributions to SEP IRA of an S Corp office. Yep, contributions to a SEP. We just covered that. So retirement contributions are going to go on line 7. Keep in mind everything we talked about a little bit ago. One question I missed about the FTEs, how do we differentiate between FTEs and number of employees? So 2 different purposes. The FTEs are calculated. Refer back to the instructions or this video when you rewatch it about how to calculate your FTEs if you're wanting to. Okay. And then, if I'm solo, can I include my SEP IRA as retirement payment for calculation? If you are a solo, I'm assuming that means sole proprietor. If you're a sole proprietor, I do not believe you can include, we're still waiting on further guidance, but I do not believe unfortunately, sole proprietors and individual partners or partnerships are kind of getting hosed in this deal. It's not as good for self-employed individuals or individual partners of partnerships as it is for S corporation employees specifically. Okay, cash contribution in table 2 or table 1 or table 2 does not include the 401k amount. So 15,385 doesn't include 401k. 15,385 would include the employee's portion of the 401k contribution, but would not include the employer's portion of the contribution. So when you're factoring in your employee compensation, it's gross wages, which would include your employee. That's back your employee's contribution. That's back in table 1 or table 2 of Schedule A. What we just went over here on line 7 has nothing to do with the employee. It's 100% the employer's contribution. Okay, so can the group health insurance amount include partners not paid as a W-2? So if they're individual partners, we do not believe at this point in time that it will include the health insurance of individual partners. If you are S corporation and the partner in the partnership is an S corporation, then it should have been structured or should be structured where there's a PPP loan specifically for the partnership, and there's a PPP loan specifically for the S corporation partner of the partnership. So that one can get tricky. Partnerships can get tricky specifically. But if they're an individual partner at this point in time, without further guidance, we do not believe it's going to include either the health insurance or the retirement. We believe that the entire contribution, the entire compensation amount for an individual partner in a partnership or a sole proprietor is going to be $15,385. If you're an S corporation owner, is your health insurance included in the group health plan that covers? As long as it's a group health plan, it would also include the employer contribution of the S corporation owner. Okay, I think I hammered out all the questions there. Okay, I think we hammered out all the questions there. That has to do with that. All right, so moving on. Looking back then at the application, so now we've got down through line 6, 7, and 8. We're on to line 9. So right here is where, remember earlier I said there's some conflicting language between the instructions of Schedule A and line 9 specifically. Total amount paid to owner employees, self-employed individuals, general partners. This amount may not be included in PPP Schedule A. So the question here is may not, right? Is that like cannot, should not, will not, or may not? And that's our governing body. The AICPA has asked for more specific guidance on this particular matter. So we're waiting to see. At this point in time, you're going to have to, if it's one owner S corporation or one owner self-employed individual, you would have just the number there on line 9. If there's multiple owners, you're going to have to attach a separate table specifically for this purpose. And so we're going to wait on further guidance before we get these done for clients, before we recommend what exactly to do. At this point in time, what we expect to do is include all employees on the table 2 or table 1 on Schedule A worksheet, and self-employed people here on line 9. That's where, for instance, the $15,385 would go if you're a sole proprietor, or an individual partner in a partnership would have $15,385 for each partner, but then a schedule would have to be attached to this document showing which partner was paid how much. So that's line 9 specifically. So that comes down to payroll costs. So line 10, really, it's just a matter of adding all this up. I had lines 1, 4, 6, 7, 8, and 9, right? So right here, once you've got that added up, you're going to take that and you're going to take that line 10. Remember, this entire thing got started, we wanted to calculate line 10. So we're going to take that to page 3, line 1. That number right here that we just added up for everything else is now going to go back up to page 3, line 1, payroll costs. So remember earlier we did line 2, 3, and 4. Now we've got line 1 done. So now lines 1, 2, 3, and 4. So moving on then, we got to look and say, okay, now we need to do line 5, total salary hourly wage reduction. Enter the amounts from line PPP Schedule A, line 3. So that's the schedule we were just on. So go back to Schedule A, line 3. Here's the amount that we calculated earlier, the reduction, the dollars of reduction. That came from worksheet table 1. So remember back this table over here. This summation of this here flowed from there to this line right here. And then once it's there, then it's also going to flow to page 3, line 5, all the way back up here. Page 3, line 5, total salary, hourly wage reduction. That dollar amount's going to go there. Now, so from there, line 6, next step. Add the amounts on lines 1, 2, 3, and 4. 1, 2, 3, 4, and then subtract the reduction, the dollars of reduction from line 5. So add 1, 2, 3, 4, subtract line 5. Hopefully it's 0, and then we're going to end up with that. And so FTE reduction quotient. Now that comes from Schedule PPP, Schedule A, line 13. Right here, FTE quotient came from, hopefully again, from the safe harbor calculation that we went through back over here under the, excuse me, it was back over here. FTE, so here's the FTE, so we have to skip back down to page 9 here to do this. So right here we have to look at and say, okay, we're going to enter the borrower's total average FTEs between February 15th and April 26th. Most offices were shut down, right, during at least a 6-week period during that, or a 5-week period during that. So you're not going to have average FTEs for that 5-week period. You will from February 15th to March 15th, but not for the other. And so there you're going to say, okay, enter the borrowers. So it's going to be a much lower number when you factor in a weekly basis, just mathematically. So we're going to look at step 2, enter the borrower's total FTE and the borrower's pay period, inclusive of February 15th, 2020. So what was the average FTEs there? That's where we'd say, okay, average FTEs were 6, for instance. So we've got 6 here, or when you do the calculations and the average of all the weeks here between February 15th and April 26th, maybe it's 3. So step 2 is greater than step 1, right? So step 3, look at it and say if entry for step 2 is greater than step 1, proceed to step 4. That's what we want to see happen. We want to see step 2 being greater than step 1, and therefore proceed to step 4. This is where the safe harbor rule comes into play. Enter the borrower's total FTEs that we already calculated as of June 30th. So that's going to be this amount right here. So say that it's back at 6, or maybe it's at 6.5, or it's at 7. So if entry of step 4, 6, 6.5, 7 is greater than the step 2, which we said was 6 at February 15th, then you're going to enter 1 on line 13 of PPP Schedule A. So this application doesn't exactly flow super well, but that's kind of the way it flows. It goes from that back up here to line 13 right here, and then once you go to from line 13, you're also going to take that to page 3, line 7. So it's going to go from page 6, line 13, back to page 3, line 7. Hopefully that's a 1, and if that's a 1, then we're going to see. If that's a 1, then then perfect. So then that's going to be to your benefit, because the next step is, you see, multiply line 6 by line 7. So you're going to take our total after reduction, which hopefully is 0. So total after reduction, payroll costs, mortgage interest, lease, and utility payments minus our reduction, total times line 7. So if it's a 1, that means that the modified total is going to be the sum of your payroll costs, your mortgage interest, your rent, and your utilities. From there, the rest of it's pretty easy. Line 9, your PPP loan amount, that's going to be the same amount that's here under PPP loan amount at the very top. It's going to go down on line 9 as well. Line 10 is going to be your payroll cost requirement. So divide line 1 by 0.75. So line 1, payroll costs divided by 0.75. So essentially, what this is saying is that if your loan is $100,000 and you only spend $50,000 on payroll, that means the inverse of that. So it's going to be 50,000 divided by 0.75. It's going to be $66,667 is going to be eligible for forgiveness. at that point in time. That's essentially what that's calculating. So if we had payroll cost is your line 1 divided by 6667. So, and then forgiveness amount here, enter the smallest of line 8, 9, or 10. So in that scenario, here, line 10, payroll costs where you didn't use all of your loan, you didn't use most of it, you only used 50,000 for your payroll costs. So therefore, 66,000 essentially is eligible for forgiveness instead of the 100 you got to loan for. That's going to be your loan amount. So that's a mathematical calculation here too on line 11 for forgiveness. So, which that brings you to the end of the math, right? So let's take a look at some questions and say, okay, from our supporting schedules and from all the documentation we have to provide from everywhere, we've now got the forms filled out. Now we just have to read through some of the legalese aspect here. Let's look and see if anything's been uploaded. Okay, if you're a W-2 of your S corporation, can you contribute for your profit sharing for yourself? Yes, you absolutely can contribute retirement for yourself if you're a W-2 employee of an S corporation. That's the exact same concept as being an employee of an S corporation. And then let's see here, business mortgage interest write-offs applies to them who own their building or office space. No, so real estate, right? So it could, real or personal property is what the interest expense that could be included here on line 2 would include. It would include the interest on a building, interest on equipment, etc. So real or personal property interest expense. And then, okay. Should I include myself as well as the employee number? Yeah, sure. Yeah, nothing wrong with doing that up here in the employees at the time of forgiveness application. And then let's see, we just answered that one. Okay. So if you only spend 50% of your PPP money, but spend 80% of that on payroll, can you still get that forgiven and give the other 50% back? So if you, as long as you've, so that's going to come down to line 10. You're going to fill everything out, right? And then when it comes to line 10, you multiply line 1, divide line 1 by 75%. And that's going to give you the amount that is eligible for forgiveness, which is 75%, greater 75% of the payroll costs. So, so hopefully that answers your question about spending less than your entire amount of your loan. Okay. Let's see if we just answered that. There's a couple of questions that have been in here about the forgiveness amount going to be minus the idle amount. Yeah, the SBA and the bank's going to take that into consideration and subtract that out of your forgiveness amount, your idle advance specifically. Here's a great question. Is this a punishment application or what? I am lost. They made it so complicated that you say, pay me back the loan and forget this application. Thank you so much for calling out the obvious that we are all in. So even from our viewpoints, we were reading through this as a team this weekend, and we're all like, this is an absolute joke. Like, it is so difficult and so convoluted and so frustrating. So that is a great, thank you for calling out the elephant in the room. I needed a great laugh on that one. So yes, it's very difficult. It's very difficult, very frustrating. And you have to bounce back and forth. So the best thing you can do is try and flow through it the best you can. Why did owner comp change to 15,385 from 16,600? So it was 16,666 was a speculated amount, and that's based on an 2 months, right? 2 month period. And so 15,385, if you take 100,000 divided by 52 multiplied by 8, you end up with 15,385. If an employee quit, how do you fill out the table affect forgiveness? And that's where it's specifically said in there that if your employee, if you've made a good faith offer or attempt to get your employee back in writing, then it will not impact your FTE count. As long as you've tried and they are not comfortable coming back, or they do not want to come back, and so email them, hey, we want to have you back. There's plenty of templates out there that are Bring your employee back templates. There's plenty of them out there you could use. Email them, get it in writing that you've offered, get their reply back in writing that they're not comfortable coming back. And that's how you take care of yourself and cover yourself and if an employee doesn't want to come back. Okay. We've got about 4 more minutes too, and I got to call it quits. So we're not going to get to all of the questions, but I feel like I've been looking through them, and I feel like we've at least hit on all of the questions in here already. At this
Yeah,
point.
well over 200 questions. And then I did notice that great comment that she put in there about, is this application punishment? So I'm glad that you spotted that one and addressed it. That was pretty
It
good.
feels like, I mean, my team feels like it's punishment. That's for sure. I know that. It's just horrible, horrible.
Is there, and Drew, is this submitted electronically? Or are these all paper applications that they're taking in and they're going to somehow process all the information?
That's a fantastic question. We don't, we don't know exactly what the process is going to look like yet at this point in time, but we're expecting most banks to take the application as well as all of the, supporting information that I ended up going through line by line as we were going through line 1, 2, 3, 4. Excuse me, 2, 3, 4 at least. We didn't go to the supporting information for line 1, but take that information into account and submit it back to the bank, and then whether or not the bank takes that, and has to submit that to the SBA or not. Originally it was going to be that they were going to submit everything to the SBA, and then the SBA had 60 days to respond. I believe that may still be the answer. I've heard that it's only going to be for larger loans, so loans in excess of $2 million at this point in time, and that loans in lower than $2 million are going to be at the bank's discretion to review the forgiveness application information, supporting documents, and make sense from there. So.
And Drew, as we move towards an hour and a half, and I definitely appreciate your time, and I know you're wrapping this up, I don't want to speed you up on that, but I do want to have your contact information both up on the screen as well as into the chat. So what's the best way people can get a hold of you and your team?
Yeah, they can. So they could email me directly at Drew, DREW, at engageadvisors.com. They can always visit us online at www.engageadvisors.com as well.
Perfect. Yeah, there's well over 300 people on here at any given time. So if everyone wants to send Drew an email simultaneously right now, I think that would be fantastic.
Blow my email box. Oh my goodness.
Just burn a hole in his email box right now.
Yeah, and so just be cognizant that we have to prioritize existing clients first. So I'll respond when I can. But but ultimately we're working through and trying to help our clients through this process. So.
And Drew, if we want to follow you guys, is there sort of an email chain or is there some sort of way I know you guys are reviewing this information all the time. You guys are doing fantastic work. Can we follow you for updates on this and stay in touch with you guys some way?
Yeah, absolutely. So we have been submitting or sending out updates as they come about. Like for instance, yesterday morning, we sent out a pretty detailed update with respect to the forgiveness application. We've got a little form that could be filled out here.
So you're going to paste that form in the chat?
Yeah, let me put that in the chat box. I should have had that ready to go. But that way, if you want to get on our notification list as things come about, or as we have further guidance on certain aspects or anything like that, then we will, we'll continue to send out updates and go from there. So.
And as we move towards the close, I see some thank yous coming into the chat box. Drew definitely appreciates those. If you want to put a thank you or a comment in the Q&A as we draw to a close for Drew. I know we have a few of your clients on here, so if they want to put in a quick testimonial or a comment into the Q&A box, we can all see that. It's great information. Drew, I don't want to cut you off. We can go all day with this if you want, but I know you're a busy guy.
For sure.
So I'm going to throw it back to you. I'm going to let you finish up this application and then move to the closing comments and parting words of wisdom for us, and then back to me, and I'll close out the call whenever you're ready.
Yeah, so I just want to go through the very last page right here real quick, right? So there's some things that you're going to have to certify, right? And you're going to have to initial all of these things. So make sure that you read through this properly. So you've all seen the news media crucify people for perjury before, right? So make sure that you're reading through these certifications and initialing them in good faith, because the last thing you want is to be persecuted for perjury yourself. items that I want to really point out is super, super, and super important is that understand the funds were knowingly used for unauthorized purposes. The federal government may pursue recovery of the loan amounts and or civil or criminal fraud charges. So that's a big one that you're gonna have to certify. You only use the funds for eligible amounts: payroll, rent, utilities, mortgage interest as applicable. Do not use them for anything that is not eligible at all, because the last thing you want is to certify this and then end up being made an example of for civil or criminal, even worse, criminal fraud charges, which can get real nasty. So, but it's going to take some time to fill this out. It is going to be a headache. I, on behalf of the Treasury, will tell you that I'm sorry, because I don't think that they will tell you that they're sorry. But it is what it is, and if you want the free money, I guess, right? So you have to put in the effort to get it done. So.
Awesome. Yeah, an excellent presentation, Drew. With your permission, I'll put this up on the podcast. And for those that are listening on the podcast, I haven't gotten Drew's approval yet, but if he does, www.engage, E-N-G-A-G-E, advisors, plural, ADVISORS.com. Is that correct, Drew?
Yeah, that's correct. No, you can absolutely post this.
Awesome. And then there's a few that are asking for the video, because there is a visual format to this, or a visual component to this, that's pretty important as you put this application up there and went through it. Fantastic information. So, I would love to put it up on a YouTube version. I'll probably run that by you first before we post that up. But
Perfect.
A lot of people want to see this. And I'm going to give you the video in case you want to post it. But I do advise everyone here, if you're working with the CPA, great. Dental CPA, fantastic. And if you're working with Engage advisors who are dental CPAs, you're doing the best thing you possibly can for you and your business. So, Drew, parting words of wisdom from you, 20 seconds as per usual, and then throw it back to me and I'll close out the call.
No, I don't. Thank you guys so much for all your time and attention. I know we are half an hour over where we wanted to be today, but this is it's a monstrosity. I mean, it took us a couple of days to get through and digest and try and get through the best information. So. Thank you so much. If there's any questions, again, Drew, drew@engageadvisors.com, and I'll get to them as soon as I can. I've got to prioritize existing clients first, but happy to help where we can. So.
Absolutely fantastic, Drew. I can't thank you enough. America's Dental CPA, once again, coming on to help us through this. I feel that you could have gone through this application a lot slower. I had to speed you up to get through all this information. But that being said, I think there's more information to be disseminated later. And again, everyone on this call, everyone listening on the podcast, please engageadvisors.com, link up with them. They'll send you some information. You can kind of follow them. And then, if it makes sense to reach out to them for further assistance. And I do see a few of your great team members here on the call amongst the attendees. So, definitely something to do. So with that being said, Drew, thank you so much for the time. That was fantastic. It's always fun. I think this is our 4th or 5th week in a row, and you've given all these people so much great information. So on behalf of the people that came on, I want to thank you. On their behalf, I want to thank you from me as well. And with that being said, we'll go ahead and close it out. Again, I want to have you back, but I want these people back at work so they can't show up. I know. At 10 a.m. on a Tuesday.
Two of us, right? And I know all of our clients, and all of our clients that have been going back to work, the bright news is that they've been so busy, and so it seems like at least the initial push out there is very positive. So glad to see that. Really hoping for a really positive rest of 2020 and go from there.
Excellent. A light at the end of the tunnel, and I love the optimism, and I'm excited to see everyone get back to work.
Yeah,
350 people came in today. We had 250 questions. I'm sure that you want to take a moment and get a drink of water and take a break, but I'm sure you're going to deal with a client here in the next 30 seconds once you hang up this call. So, yeah, Drew Hinrichs, America's Dental CPA, I appreciate it again. And with that, we'll go ahead and close out the call. Thank you, my friend.
All right. Have a wonderful day.